Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gcm Grosvenor Inc. Annual Report. Gcm Grosvenor Inc. is a global alternative asset management solutions provider that offers a wide range of services to various clients. The company primarily provides its services to pooled investment vehicles, including investment companies, high net worth individuals, pension and profit sharing plans, and state or municipal government entities. The firm invests in various markets, both domestically and internationally, focusing on equity and alternative investments. Its portfolio includes multi-strategy, credit-focused, equity-focused, macro-focused, commodity-focused, and specialty portfolios. Gcm Grosvenor Inc. also focuses on hedge fund asset classes, private equity, real estate, infrastructure, credit, and absolute return strategies. In terms of specific investment types, the company engages in primary fund investments, secondary fund investments, and co-investments with a focus on buyout, distressed debt, early venture, mid-venture, late venture, turnaround, mature, mezzanine, and venture capital/growth equity investments. Additionally, Gcm Grosvenor Inc. seeks to make seed investments in small, emerging growth and diverse private equity firms. The company's geographic focus includes Europe, as well as specific regions within the United States such as Michigan, North Carolina, Colorado, Idaho, Montana, Oregon, and Washington. Its investment preferences include aerospace and defense, advanced electronics, information technology, biosciences, and advanced materials. Gcm Grosvenor Inc.'s investment approach combines fundamental and quantitative analysis with a preference for majority stakes in its portfolio companies. The company was founded in 1971 and is based in Chicago, Illinois, with additional offices across North America, Asia, Australia, and Europe. Unfortunately, I do not have access to the text that was supposed to be provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of any company can fluctuate due to various reasons. One major reason is poor financial performance. If a company fails to meet its revenue or profit targets, investors may lose confidence in the company's ability to generate returns, leading to a decline in stock price. Another reason could be changes in market conditions. A shift in consumer demand, increased competition, or economic downturn can all impact a company's sales and profitability. Additionally, regulatory issues or scandals can also negatively affect a company's stock price. If a company is found guilty of any wrongdoing, such as accounting irregularities or environmental damage, investors may lose trust in the company's management and values. Furthermore, changes in leadership or key personnel can also impact investor confidence and lead to a decline in stock price. Lastly, external factors such as global events, industry trends, and market sentiment can also influence a company's stock price. For instance, a pandemic or natural disaster can affect supply chains and demand for certain products, leading to a decline in stock price. Similarly, changes in government policies or regulations can impact industries and companies, causing stock prices to fluctuate. In conclusion, there are many reasons why a company's stock price may drop. It is often a combination of internal and external factors that contribute to this decline. The Gcm Grosvenor Inc. market capitalization of $2 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Gcm Grosvenor Inc. holds a significant advantage in their industry. Gcm Grosvenor Inc. trades at a higher price-to-earnings ratio of 36 times and a higher price-to-book ratio of 26.08 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 115% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 4.14%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Management fees are a significant source of revenue, with fluctuations depending on the period. Incentive fees also contribute substantially to revenue, but their recognition is subject to market constraints and judgments outside of the company's control. Carried interest and investment returns are other variable considerations that impact revenue growth or decline. These are susceptible to market factors, judgments, and actions outside of the company's control, with recognition as revenue constrained until it is probable that a significant reversal will not occur. In addition to these drivers, various events can also impact revenue growth or decline. For instance, changes in net asset value, assets under management, average net assets, limited partner commitments, and invested assets all play a crucial role. Furthermore, specific events such as the exercise of public warrants, issuance of Class A common stock, and exchange of partnership units for Class A common stock can also influence revenue growth or decline. Overall, understanding these drivers and events is essential to accurately assessing revenue growth or decline for a company. The net income of the company underwent a significant transformation between 2023 and 2025. Initially, it was negative at -$29,206 in 2023, but then experienced a substantial increase of 523% to $36,604 in 2024. This upward trend continued with an additional growth of 289% from 2024 to 2025, resulting in a net income of $142,040. The profit margins also witnessed considerable changes during this period. The operating income margin improved dramatically from -2.6% in 2023 to 23.9% in 2025, indicating a significant improvement in the company's operational efficiency. Similarly, the net income margin increased from -6.7% in 2023 to 25.5% in 2025, showcasing the company's ability to generate substantial profits. The adjusted net income margin and fee-related earnings margin also experienced growth, albeit at a slower pace. The adjusted net income margin rose from 75.2% in 2023 to 75.6% in 2025, while the fee-related earnings margin increased from 38% in 2023 to 44% in 2025. These improvements suggest that the company's financial performance has been consistently strong over this period. The company's financial performance is a notable aspect of its overall health. A key indicator of this is the generation of positive operating cash flow. According to the provided information, the company has consistently demonstrated a positive operating cash flow over the past 3 years. On page 91, it is explicitly stated that the company's operating cash flow is indeed positive. This is further reinforced by the figures presented on page 100, which show an increase in operating cash flow from $92,065,000 in 2023 to $148,774,000 in 2024, and finally reaching $183,539,000 in 2025. These numbers indicate a steady growth trend in the company's ability to generate positive operating cash flow. This is a significant achievement, as it suggests that the company is effectively managing its finances and generating sufficient revenue to cover its expenses. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, the debt level increased due to previous amendments. However, a decrease of $3.604 million was observed from 2024 to 2025, followed by another decrease of $4.4 million from December 31, 2024 to December 31, 2025. Regarding interest expenses, there has been a consistent trend of decrease. From 2024 to 2025, the interest expense decreased by $1,371,000 and also by $1.4 million or 6% to $22.8 million in 2025 compared to 2024. Additionally, the change in interest expense from 2023 to 2025 was a decrease of $1,371. Overall, both debt level and interest expenses have shown a downward trend, indicating a reduction in financial obligations for the company. The performance of various regions and segments within the industry has been mixed, with some areas excelling while others struggled. Regions that performed well include the global market, where 68% of top clients expanded their investment relationships. Non-US markets also showed momentum, particularly in 2025. These positive trends were driven by growth in key sectors, such as private equity and infrastructure. Private equity saw a significant increase in assets under management, AUM, to $32.9 billion, while infrastructure experienced an impressive 212% growth over the last 5 years, reaching $18.7 billion in AUM. The Elevate strategy also demonstrated success by closing its first fund in 2024 with approximately $800 million of capital. In contrast, certain segments struggled. Alternative investment strategies faced increased competition, making it more challenging for firms to stand out. Fundraising efforts also declined, with a decrease in both pace and size. These underperforming areas highlight the need for adaptation and innovation within the industry. The company's outlook is optimistic, driven by its strong financial performance over the past few years. The company has reported increasing revenue and net income, indicating a solid foundation for future growth. Its investment strategy focuses on providing comprehensive solutions to institutional and individual clients, which has contributed to its success. Management is confident in its ability to mitigate market risks through its investment approach and strategies. The company's capital structure is also robust, with significant cash reserves and access to debt financing. This will enable it to fund operations and planned capital expenditures for the foreseeable future. However, there are some potential risks and uncertainties that management is aware of. These include the impact of new accounting standards on its financial statements and the outcome of ongoing litigation. Additionally, payments under the tax receivable agreement may reduce cash availability in the short term. Overall, while there are some challenges to be addressed, the company's strong financial performance and solid investment strategy suggest a positive outlook for the future. Management is well positioned to navigate these risks and capitalize on opportunities as they arise. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company purchased Customized Fund Investment Group from Credit Suisse Group AG in January 2014. Additionally, it acquired equity interests in GCMH from certain current or former GCMH equity holders. On the other hand, the company has also made significant divestitures. One notable example is the prepayment of $65 million on an outstanding term loan facility in February 2026. Furthermore, the company repurchased shares of Class A common stock worth $30.7 million in 2025. The company has also terminated several derivative instruments, including one in February 2021 and 2 others with notional balances of $232 million and $68 million in October 2022. These acquisitions and divestitures demonstrate the company's efforts to optimize its financial position and make strategic investments. The company has been actively involved in share buybacks and dividend payments over the past few years. In terms of share buybacks, the company has a clear plan to repurchase shares from its stockholders. As per various pages, the company has authorized up to $255 million for share repurchases, with an actual spend of $30.7 million in 2025. The remaining balance under this plan is $55.7 million as of December 31, 2025. This indicates that the company has indeed bought back shares from its stockholders. On the other hand, the company has also been paying dividends to its shareholders. As per various pages, the company has paid dividends in 2025, with a total payout of $25.3 million for the year ended December 31, 2025. The company's dividend policy is dependent on distributions from GCMH, but it currently pays quarterly dividends to its stockholders. This suggests that the company has a commitment to returning value to its shareholders through both share buybacks and dividend payments. There are valid concerns regarding inventory buildup and supply chain disruption in the company's operations. The variable nature of revenues and cash flows poses a significant risk to the smooth functioning of the supply chain, page 35. This unpredictability can lead to stockpiling of inventory, which may not be sold before it expires or becomes obsolete. Furthermore, there is an explicit warning that the company's actions could disrupt global supply chains, page 55, indicating a potential threat to the entire industry. That concludes the financial summary for GCM Grosvenor Inc. Feel free to comment below, and I will be happy to answer them when possible.